Welcome to the first episode of Eastern Alpha, a channel dedicated to uncovering long-term investment opportunities in China's mainland and Hong Kong capital markets. Today, we're diving into a phenomenal company. Over the past year, its stock has skyrocketed by more than 700%, and at one point, its market cap even surpassed the combined value of Mattel and Hasbro, and it all began with a toy just 8 centimeters tall. This little figure has sparked global buying frenzies, store brawls, and a flood of counterfeits. The company is POP MART. You may have seen Labubu on social media, a fang-toothed, grinning, furry little gremlin keychain. More than just a toy, Labubu has become a cultural icon and the ignition point behind POP MART's multi-billion yuan revenue engine. But for investors, this story is far more complex than one viral product. Today, we set aside the surface-level hype and examine the deeper investment logic behind POP MART's explosive growth. Is it underpinned by solid fundamentals, or is this an unsustainable market frenzy? Are we witnessing the rise of a global IP giant, or is this just another Beanie Baby-style trap waiting to collapse? In April 2024, Blackpink's Lisa posted a photo with her Labubu figure on Instagram. Within just 7 days, the hashtag Labubu had generated more than 110,000 new TikTok videos, showing clear viral momentum. But celebrity influence was only the spark. What truly catapulted Labubu to stardom was its alignment with two major consumer psychology trends. First, the rise of ugly cute aesthetics. Gen Z is increasingly drawn to challenging traditional beauty norms, embracing quirky, chaotic, and mischievous designs as a form of self-expression. Second, the kidult movement, where adults buy toys for emotional healing, nostalgia, and identity. Labubu perfectly taps into this intersection of personality and comfort. In an era where cute is no longer enough, Labubu's wicked grin has become a more avant-garde statement of style. Of course, Labubu is just one star in POP MART's growing IP empire. The company's portfolio is structured into clear tiers. In the superstar tier alongside Labubu, we must mention Crybaby. Unlike Labubu's top-down virality via global celebrity, Crybaby's success stems from cultural resonance. Created by Thai artist Mod Nisa Srikamdi, Crybaby's strong local identity has won deeply loyal fan bases across Southeast Asia, especially in Thailand. POP MART's large-scale offline events in Bangkok have further amplified its regional influence. If Labubu is a top-down blitz campaign, Crybaby represents bottom-up regional cultivation. Next is the mature and stable tier, the structural backbone of POP MART's IP strategy. Skull Panda appeals to alt-culture consumers with a futuristic, dark aesthetic. Hirono is an emotionally resonant IP symbolizing sorrow, joy, and resilience. Infused with creator Lang's personal narrative, it evokes strong emotional bonds. Molly and Dimu, as legacy IPs, may lack the buzz of newer characters but retain a stable fan base and deliver consistent sales. In the emerging tier, the standout is Hockey Poo Poo. POP MART has demonstrated strategic foresight here. Through a co-branded release with Disney's Stitch, Hockey Poo Poo reached a vast, non-core audience. This collaboration acted as a Trojan horse to build anticipation for its upcoming original series, Gummy Bear. Fans are already asking, could Hockey Poo Poo be the next Labubu? This is POP MART's IP flywheel in action. Rather than depending on a single hit, the company drives sustained growth through artist incubation, content expansion, and community engagement across multiple character lines. From an investment standpoint, POP MART operates like a high-speed IP printing machine. Its premium valuation rests on 3 pillars: explosive financial growth. In 2024, POP MART's total revenue exceeded RMB 13.04 billion, up 107% year-over-year. Adjusted net profit surged 186%, reaching RMB 3.4 billion. Gross margin hit a historic high of 66.8%. 2025 revenue growth remained strong at 165% to 170%. Accelerating global expansion. Overseas revenue in 2024 grew 375% year-over-year, increasing from 17% to nearly 39% of total revenue. North America alone recorded nearly 900% growth in Q1 2025. This global diversification is helping mitigate China-specific regulatory risk, which is why investment banks like JP Morgan and Citi have raised their target prices. Sustainable IP development. Beyond Labubu, 3 other IPs, Molly, Skull Panda, and Crybaby, each generated over RMB 1 billion in revenue in 2024. This validates the scalability and replicability of POP MART's IP flywheel model, identifying creators, incubating characters, and monetizing them across channels. The company is also expanding into high-margin categories like plush toys and mega collectibles, strengthening long-term IP monetization. That said, POP MART faces real risks. First, an extremely high valuation. At one point, the company traded at over 100x PE, compared to Sanrio at 41x and Mattel at just 12x. The market may have already priced in several years of perfect execution. Second, regulatory overhang. This is the sword hanging over POP MART. Recently, state media People's Daily published a strongly worded editorial criticizing blind box mechanics as exploitative and addictive for minors. The market reacted swiftly, with POP MART's stock dropping sharply and over $4 billion in market value erased within 48 hours. Even in 2023, China had already banned blind box sales to children under 8. The latest signal suggests that stricter regulation may be imminent. Third, the Beanie Babies risk. The 1990s craze for Beanie Babies, fueled by artificial scarcity, ended in collapse. Labubu's heat mirrors this: scalper speculation, counterfeit chaos, and fan backlash. When value is driven more by hype than substance, product life cycles become fragile. Can POP MART keep producing the next Labubu? That's the existential test. Management is clearly aware of these challenges and is proactively evolving. POP MART is transforming from a toy company into a diversified IP entertainment group. In 2023, it opened its first theme park, Pop Land, in Beijing. It is also investing in gaming, animation, and NFTs to deepen its IP narratives and expand its universe. Which brings us to the big question: can POP MART become China's Disney? Disney's IPs are rooted in powerful storytelling. Characters like Mickey Mouse or Elsa live through films and narratives, embedding themselves into global culture. POP MART's characters, by contrast, rely heavily on visual style and emotional resonance, but lack unified story worlds. In May 2025, POP MART held its annual general meeting in Beijing. At the meeting, all resolutions were passed unanimously, including authorizations for future capital operations, new business development plans, and a comprehensive global expansion roadmap. More importantly, management used the occasion to formally unveil a bold strategic pivot. POP MART is no longer aspiring to become China's Disney. It now aims to become the world's POP MART. This is not merely a rebranding exercise. It represents a fundamental shift in the company's growth logic. To support this new positioning, POP MART outlined clear growth targets for 2025. Total revenue is expected to grow by more than 50%, potentially surpassing RMB 20 billion. Overseas markets will become the primary growth engine, with revenue projected to grow by over 100% and international sales possibly exceeding domestic sales for the first time. To achieve these goals, POP MART laid out a strategic framework built on 4 core business pillars. First, POP MART plans to open approximately 100 new stores overseas in 2025, focusing on flagship locations in the US, Thailand, and other strategic markets. Key cities such as London, Paris, and throughout Southeast Asia are fast becoming major brand strongholds. Second, the company is shifting its strategic focus from launching a high volume of IPs to enhancing quality and depth. This includes expanding its product categories beyond vinyl toys into plush, apparel, and even jewelry, in order to deepen monetization across IP life cycles. Third, building on the success of its Pop Land theme park in Beijing, POP MART plans to add more pop-up stores and art exhibitions, enhancing immersive brand experiences for fans and collectors. Last, this is the company's most critical strategic transformation. POP MART has established a film studio and plans to release its first animated short, Labubu and Friends, as early as summer 2025. This marks a reverse Disney model. Rather than launching IPs through narrative first, POP MART validates the commercial value of a character through merchandise, then retrofits the storyline and world building to cultivate long-term brand loyalty. This approach has been widely referred to as POP MART's reverse Disney path. Despite presenting an ambitious vision for the future, POP MART's management has also candidly acknowledged the very real execution challenges the company is currently facing. With demand for Labubu surging, the company must scale its monthly production capacity from 300,000 units to a staggering 10 million. At the AGM, Chief Operating Officer C. Day openly stated that this is a very painful process. The rapid expansion of capacity has led to significant increases in material, labor, and logistics costs. At the same time, the speed of expansion has outpaced the company's quality control systems, resulting in a rise in defect-related complaints, a potential brand risk for a company positioned as a high-end collectibles label. The company has also made it clear that it will no longer pursue the monthly drop model centered on viral hits. For IPs that are underperforming or where artists are facing creative roadblocks, POP MART will provide longer creative cycles rather than imposing commercial pressure. Management has repeatedly emphasized the importance of extending the life cycle of every IP rather than burning them out in a single wave. This shift in strategic tempo does not signal contraction. Rather, it marks a core transformation from a growth stage company to a mature stage brand. Chairman Wang Ning also stated that POP MART will devote more resources to building comprehensive content ecosystems around its core IPs, such as Labubu, Crybaby, and Hirono, with the goal of evolving them from design symbols into narrative assets with real cultural depth. From an external investment perspective, POP MART's strategic transformation carries 3 major implications. From short-term hits to long-term assets. The transition from fast-moving collectible products to enduring IP assets implies extended life cycles. This, in turn, is expected to drive higher user repurchase rates, stronger brand loyalty, and ultimately, more stable long-term revenue streams. Global expansion intensifies operational risk. Entering new markets brings sharply higher costs, particularly in supply chain complexity and management. These rising structural expenses may place downward pressure on profit margins in the short term. Reverse storytelling remains unproven. While POP MART's reverse Disney strategy is conceptually exciting, content creation, particularly in film, animation, and narrative IP development, is a high-risk, long-cycle endeavor. Its long-term effectiveness remains to be seen. POP MART is undergoing a strategic shift from manufacturing hype to manufacturing belief. This is not only the result of proactive evolution by the company's leadership, but also a response to external pressures, tightening regulation, shifting consumer expectations, and the natural limits of its operational model. The key questions now are, can it build an intergenerational IP universe like Disney? Can it complete the leap from a trend-driven toy company to a true cultural enterprise? We'll be watching closely. This is Eastern Alpha, your guide to China's most investable stories. Thanks for listening. See you next time.